As we're talking about your mortgage strategy, the interest rate plays a big part. But I feel like a lot of times there's a lot of mystery around how rates are determined. And I think sometimes the conversations around mortgages can lead you to believe that there's a rate for one program, or a particular program has one particular rate. And really it's very, very specific to your individual mortgage structure and the details of your loan. So I wanted to take just a couple minutes together to explain to you kind of some behind the scenes things of how rates are determined and the different factors that come into play with how rates are established. I wanted to show you a couple things as far as how as mortgage lenders, we're looking at the market and rates and all of that. So this first screen that I'm showing you is actually the mortgage-backed security market. Mortgage-backed securities are what sets mortgage rates. And what it is essentially how loans get securitized and packaged into a bond, a mortgage bond. So just like the stock market trades every day, the bond market trades every day, mortgages being a part of that. So what I'm showing you right here are basically the price of those mortgage bonds. And as you can see, I'm showing you a year trend. So last year when rates were kind of at their peak last November, as those prices go up, rates actually go down. So it's kind of an inverse effect. And as a result, a lot of times what people will use as a shorthand to track what the day-to-day fluctuations are doing for rates is to look at the 10-year bond, because regardless of whether mortgages are refinanced or paid off because they're sold or whatever, the average life loan of a mortgage is around 10 years. So that 10-year mortgage bond helps to show what the trend has been. This is actually showing for a day, but if I change it to a year, then it's going to mimic that mortgage-backed security that I just showed you. And again, kind of over the trend. You can also see that there are peaks and valleys. There are peaks and valleys over the course of a week, of even within a day. So there can be different pricing of where we'll see a bottom and then we'll see an increase, a little dip down, another increase up, etc. So all of that translates into then seeing really kind of an overall trend for rates. And this is the Freddie Mac rate survey. It is a survey, so keep in mind that it's going to average out a lot of different loan types, a lot of different loan details to show an overall trend. So that is what essentially kind of sets rates, how we're tracking them, and then we get into the specifics for a loan. There are many factors that go into how a rate is determined. One of those is what's called LLPAs, or loan level pricing adjustments. And what I'm showing here is a chart from Fannie Mae, who sets guidelines and those pricing adjustments which affect rates for conventional loans. So for example, when you see the higher the credit score, the higher the down payment. This is loan to value, so a 60% loan to value would have a 40% down payment. There's no adjustment to the rate. As you get lower in credit score and higher in loan to value or lower down payment, then there is an impact to the price of a rate. So this is not an addition to the interest rate, but it's actually how it's priced, meaning, to have the same rate for this scenario as this scenario, it would cost you more in closing costs, or it would cost a higher rate. There are all sorts of things that can affect rate. It's loan amount, LTV, the down payment, credit score, loan type, property type. All of those things come into being very, very customized for your specific loan. So when you're looking online, I want you to keep in mind that just like we want to make sure that we're being transparent to our potential clients, to our clients. We do show rates. We show rates to give a general indication of where the market is for that day. But any rate that you see should always make sure that it has an APR attached, because you'll want to know if there are costs associated with getting that rate. Sometimes it can be misleading to see a very low rate online, not knowing what the rates or what the fees are behind that rate, which kind of jacks up the APR, and then maybe the deal that you think you're getting, you're not. There should always be disclosures as well for what that criteria is as far as how that rate is being calculated. So hopefully you find that information helpful, that now you've kind of got some insider views on what goes into how rates are established, and in particular then how your particular rate is impacted by your loan variables. So as always, if you have any questions, I am here to help, and I would love to hear from you.